Hey everyone, Josh Martinez here, and welcome to video 9 of our Future Foundation series, Risk Management. Now, this video realistically probably won't be too long, simply because there's a lot of regulations around this. So there's a couple of things that you got to know up front. Number one, I am not a CTA, which stands for Commodity Trading Advisor. I cannot dictate your trades, and I cannot provide customized investment advice. What that means is I cannot tell you what you individually should be trading with. That's a decision that you have to make on your own. Number two, I'm not a financial advisor, okay? I cannot customize things for you. Everybody receives the same information. What you do with that information is up to you. As a trader myself and as an educator, I can share with you some really strong things to consider before placing your trade. So with that being said, let's get going. Okay, so a couple of things. Number one, if you risk all your money in a single trade, it takes one trade to lose all your money. That's a terrible idea. Don't do that, okay? Number two, make sure you are fully aware what you could lose before placing your trade. A huge mistake is placing a trade hoping it only wins and then not focusing in on the downside, because you need to be aware of that, because you could lose the trade. Like a lot of traders lose trades. I still lose trades. I've been doing this a long time. I still lose them. And if I risk too much, I will lose too much. So don't do that. This is about staying power. When you use a strategy, strategies will win 3 times in a row. They will lose 3 times in a row. Strategies will win 5 times in a row. They'll lose 5 times in a row. Every 2 years, I will lose like 12 to 15 trades in a row. It's crazy. Like, as good as I am, it still happens. And so if you're risking too much money per trade, and if you can't lose 10 trades in a row, 20 trades in a row, then it's only a matter of time, and then you lose all your money. So if you risk 20% of your account per trade, in 5 trades, you lose everything. I don't know a strategy that is like sustainable for that. So what you want to do is you want to prepare yourself to say, can I lose 15 trades in a row and still trade? Now, granted, if you're losing 15 trades in a row, there's a big serious issue. And that happens far and few in between, but you still got to be prepared for it. In my opinion, how most strategies perform, you will see the benefit from your strategy after placing 25 trades. If you place 5 trades, you win 5 trades, you're not a winner. You're just not. If you place 5 trades and you lose 5 trades, you're not a loser. You're not. You're a winner or a loser before you sit in front of this computer and place your trades. You need enough sample size and allow your strategy to win and allow your strategy to lose. And then after 25 trades, reflect and say, is this a winning formula or is this a losing formula? Is this a formula that works for me or is this a formula that doesn't work for me? And what I mean by that is find a strategy that's easy to use, easy to obey, easy to execute, and then find the risk tolerance that you want. Prepare, realistically prepare for losing 15 trades in a row and still be able to trade. But don't over risk, and don't just be so optimistic that you're not prepared for it, right? And then what you will do is you will learn a strategy, you place your 25 trades, and then you audit yourself. Hey, did I follow all the rules? Did I like the win-loss ratio? Was I able to hold on to my trades along the way? Is the drawdown acceptable? If it is, then move on to the live money, right? If not, then to go find another strategy. So a couple of things that you could do to have simple rules, because everything's a formula. If you place 10 trades, how many trades are you prepared to lose? Now, I like to prepare to say, I'm going to win half my trades, I'm going to lose half my trades, okay? So if you win half your trades, you lose half your trades. When I trade, if I am losing more money than I'm winning, I'm not going to make any money long term. I'm just going to slowly lose my account. If I make the same amount of money when I win as the same amount of money when I lose, if I'm a 50% win-loss trader, then I'm a break-even trader. It's a lot of work to break even. But if I have a reward that is bigger than my risk, then I should make money over time, right? If I have a reward 2 times my risk, I make a lot of money. Now, there's strategies where you could win 20% of the time and still make money after placing 10 trades. You lose 8 trades, you win 2 trades, but when you win, you're winning like 20 times the amount that you physically lose. And as long as you do that, it's still winning formula. There are strategies out there where you could win 80% of the time and lose 20% of the time and still make no money. Because when you lose, you're losing too much, right? And when you win too little. So you have to know that formula. So there's a couple things that I like to do. Number one, I like to say, hey, it's always a good idea, especially if you're brand new, just have a simple rule. Your reward is bigger than your risk. If you risk $1, make more than $1, and that's a good starting spot. Balance your risk, right? These are contracts. Try to risk the same amount of money that every single trade. So if you want to risk $500 per trade, then back into the contract. So like if you want to buy the market here, and this is where you want to place your stop, and this is where you want to place your limit, and you go, this is what I want to do. Great. And you look at your risk versus reward, and you say, well, my reward is 144% of my risk. So if you risk $100, you're going to make $144. So if that's the stop and that's the limit for your strategy, then figure out the distance between your entry and your stop and pick the contracts to equal what you want to risk, right? So if you want to risk 500, just make that section worth $500 of risk based upon your contract size. That may mean that you're trading with micros, right? And if you can't, right? If you're like, hey, I can't get a $500 risk because the distance is too great, then that's not an opportunity for you. So if you can balance your risk and lose the same amount of money every single time, then ultimately what ends up happening is when you are getting these percentages that where you win, you can actually grow an account. If you don't balance your risk and you only do a fixed contract size, the challenge with that is going to be you could win a bunch of small, right? Like let's just say you win like 200, 200, 200, 200, 200, but you're only risking 100 at a time. So mathematically looks great. But then you have a big trade and you risk $1,000 to try to make 4,000, but then you lose that 1,000, and that $1,000 loss wipes out all your small winners. That's no fun. And that could have been fixed by balancing your risk. Okay, so like I said, due to regulations, there's really not much I can do other than educate and share experiences here. I can't tell you what to do on your side. That's a decision that you have to make on your own, but I kind of think you're getting the gist. So high level, once again, if you risk all your money in a single trade, you lose all your money in a single trade. Don't do that, bad idea. Prepare to lose 15 trades in a row. Hopefully it never happens, but even for me, it happens every 2 years. Number 3, have a basic rule. Your reward's bigger than your risk, especially when you first start out with. Know your formula. You place 10 trades. If you're only going to win 2, now you kind of know your rewards need to be massive compared to your risk. If you win half the time, you got to know that your reward has to be bigger than your risk. Otherwise, you won't make money. So know that formula. And then, just have fun with it. Test different things. Try it out. And, you can sometimes especially when you begin to balance your risk, that's the way to go. Like if you can say, I'm going to risk $400 per trade, and let's say you win half the time and you risk 400 to make 600, after 10 trades, you should make money because you win 5, you lose 5, but when you win, you're winning $600, you're winning $600 at a time, but when you lose, you're losing $400 at a time. That's a winning formula. Know your formula, push your formula through, have your formula match the strategy that you like, and have some fun with it. All right, everyone, my name is Josh Martinez. Have a wonderful day.